Thank you, Bucky. I am absolutely delighted to be here with you in Chicago and share with you what's happening with the Private Company Council. And before I start, though, I want to say that the words that I express are my own and are not the words and opinions of the FASB or the PCC. So got that out of the way. I wanted to talk a little bit before we get to the slides, and I think you all have them in your handbook, talk to you about the composition of the Private Company Council, because I think it's important when you know the composition, then you'll know how we work together. The Private Company Council is 9 members plus a chair, Billy Atkinson, former chair of NASBA. And Billy apologizes. He would be here today, but there's a Texas A&M council meeting, so he has an Aggie gathering. But he sends all his best wishes to you. But we have 9 members on the council. There are 3 auditors, of which I am one. There are 3 preparers, that is CFOs, controllers of private companies, and there are 3 users. Lenders, there's someone from a bank, there's a president of a finance corporation, a merchant corporation, and there is someone who provides debt and equity to private companies. So we are balanced between auditors, preparers, and users. And I think it's very important that we are constructed that way so that we will focus on relevant information for the users, along with cost implications of GAAP and the auditing requirements for the auditors when they have to audit all this information. So let's go ahead and get started with the slides. I'm going to go through the beginning ones pretty quickly and save information at the end where we're going to talk about what the PCC is really focusing on right now, what we've been doing. But the beginning is a little bit about the FASB and what exactly is the Private Company Council, then the activities summary, and I will have some time for questions, plus when we have the break afterward, I'll be somewhere in this room and you can ask me any questions you want, and I'll be here for the next couple of days as well. What is the private company landscape right now? The private financial reporting landscape? Well, there have been a number of issues and a lot of stress points. There is change fatigue. You had fair value accounting that it was concerning to everyone. You have conversions between the United States and international accounting standards. You have a lot of things going on. It was not a simple scenario. That's what we had. We also have the standard setting process in the United States that covers both public and private. On the public side, you also have the SEC weighing in. And over the standard setter of US GAAP is the Financial Accounting Foundation. And the foundation is the one that appoints the FASB members, and it's also the one that appoints the Private Company Council members. The FASB has had the purview over private and public company GAAP. There have been concerns over the past number of years that I'm sure all of you are aware of that it seemed to be much more big company, big GAAP focused rather than private companies. And the Blue Ribbon panel was formed. There have been other committees and task forces formed over the years to address the issue of paying more attention to private company matters within the standard setting area, and that's why the Private Company Council was established. You have the FASB chairman and board. The board members serve 2 or can serve 2 5-year terms. The Private Company Council members serve 3-year terms as of right now, but it's a new organization. We'll probably see as things go how they will stagger terms and that sort of thing. There are over 73 staff at the FASB. There are practice fellows and project managers that are assigned to all the technical subjects. So for every subject like leases, revenue recognition, VIEs, there will be a technical team. And you might have several project managers on a team, you might have just one. But they will be organized into these teams, and right now on the Private Company Council, we will be involved with those staff members on those different projects. The FASB work products, I'm sure you know, you have the codification that was put out in 2009, and then the updates, the ASUs are occurring as each year as we go. The actual standard setting process you can see on this particular slide is very, very thorough. There is information gathering, there is outreach, then an item will be placed on the agenda. Once an item is placed on the agenda, there will be more analysis by the staff. There will be deliberations. If it goes forward, there will be an invitation to comment, an exposure draft. All of that information will come back to FASB. Then there will be further outreach, especially to users of financial statements and preparers. Historically, I think there's always been a lot of feedback from auditors and preparers to FASB about possible new pronouncements. They really want to know the user perspective as well, because that will tell them what is really relevant, what is not relevant. It's a very lengthy process with a lot of deliberation and a lot of outreach. And the people within FASB, both the FASB board members and the FASB staff, have a wealth of experience and knowledge in financial reporting, in research, in investing, user concerns, the public interest. So it really is a body that wants to focus on the different aspects and different concerns of the various groups. And here you have the various participation groups that they reach out to. Actually, right now, I'm involved with an outreach. We're taking a look at development stage companies. And I'm from San Francisco. There are a lot of startup companies in San Francisco. And so I am linking up the FASB's person in charge of development stage outreach with various VCs, angel investors, those types of people who are investing in private companies to see what information of development stage financial statements they find the most relevant or perhaps irrelevant. Perhaps they don't look at something at all that other people think is very, very relevant. So there's this great engagement of outside users. There are a number of advisory groups. You can see them here. And I would also say that within the Private Company Council, many members of the council came from these advisory groups. So we have someone from the Small Business Advisory Council, for example. We have someone who was with the PCFRC of the AICPA, the Private Company Financial Reporting Committee of the AICPA. We have somebody who was with the EITF for 8 years. So FASB works with all these groups and also looks to those groups to be possible FASB members, to be possible Private Company Council members. But engaging the users is a top priority. The Emerging Issues Task Force, I'm sure you've all, for the practitioners and auditors in the room, you have read the EITF communications and projects that committee is working on. I happen to have volunteered to be the PCC liaison to the EITF. I had no idea how much work they do. They have full-day meetings on very, very technical, narrow issues. And it's quite interesting. And if you go on the FAF website, FASB website, you can see what the EITF is doing. But the EITF is a very important part of the picture, and the reason that I am a liaison, that anyone is a liaison with EITF, is that we might be considering the same thing, and we don't want to duplicate each other's efforts. So if the Emerging Issues Task Force thinks about a new topic, and it really affects private companies more than public companies, then we would talk about that at the Private Company Council. As an example, they recently had one on stock compensation and compensation awards, and it really, the scenario that it was talking about really had to do with private companies. So in that way, that'll go on our list as well, so that we're both aware of what's happening. Now, the Private Company Council was established May 30th of 2012, and the council members were appointed in September, late September. We had our first meeting in December 6th. So, I don't know, I think we've been pretty busy since December 6th. It's only been a few months, and we really, thanks to our incredible chair, Billy Atkinson, we really hit the ground running. In part, the groundwork was there in the past because so many issues have been raised by probably many of you in this room and others through various task forces and the Blue Ribbon panel about what issues this group should look at. So the council was established in 2012. We identify, deliberate, and vote on proposed alternatives within existing U.S. GAAP for private companies. And we are the private advisory body to the FASB on their active FASB projects as well. So we're doing a look back. We're looking back at prior pronouncements, including your favorite VIEs, FIN 46, and other pronouncements. We're looking back to see if there are alternatives that should be considered for private companies. And at the same time, we are looking at current FASB projects, leases, revenue recognition, that sort of thing. And at the same time, we're seeing what EITF is doing. Our agenda process is similar to the FASB's. That is, we also identify potential GAAP alternatives. We do pre-agenda research and analysis on the issue. That is done by the staff. They bring it to the PCC, we discuss it, and then we vote on whether to put it on the agenda. And that vote is by supermajority. So once we do that, then the staff will really get to work and prepare a very, very technical analysis of possible alternatives, pros and cons for U.S. GAAP for private companies. We will deliberate that. We'll put something out for exposure, and then we'll get all the comment letters back. We'll redeliberate, and if we vote on a final product, then the FASB endorses it. They endorse it within 60 days, and if they don't endorse it, they must provide written explanation of reasons why and suggestions as to what could be done to make it be endorsed. Frankly, the way that we work right now, I think the times where something is not endorsed will be rare. I mean, that's just my own personal opinion, but there is significant input from FASB members at every PCC meeting. They are there, the whole FASB board is there. They are sitting there with us, so they can hear us deliberate. They occasionally will make a comment, but they are seeing exactly what we're doing. They are reading everything that we're doing. They're reading about it ahead of time. So it's a very good discussion, and it leads to very robust analysis and very thorough review of a particular topic. And our discussions are very robust because you have users and preparers and auditors which don't always align in their viewpoints. So it's a very, very good discussion. So this is the PCC process. We have agreed upon criteria to identify the projects and alternatives. 2/3 vote is required, and the FASB endorsement is by simple majority. Once again, they act within 60 days. So our interaction, we have this endorsement process. There is a FASB liaison. There is a FAF liaison. I think you probably can get the picture that we have a lot of support. We have our own FASB staff that are just focused on what we're doing. The FASB attendance at our meetings, their support is critically important, I think, to the success of the Private Company Council. The Private Company Decision-Making Framework, you may have read about it. It is a tool that we use to analyze a possible alternative to GAAP for private companies. It has differential factors. The framework talks about how private companies are different from public companies. You have different kinds of equity needs. You have access to management. And access to management is key in determining which kinds of alternatives to use, because if a user gets a set of financial statement, and within our group the users say, yes, if I have a question about the litigation footnote, I'll just call management and ask them, tell me what's happening with this litigation matter. Or if there's an acquisition potentially happening in the future, something that's indicated in the financial statements. Those users have access to management that public company investors generally do not. So this private company framework talks about the differential factors between private companies and public companies, and then discusses these various ways that GAAP might be different for private and public companies. Recognition and measurement, display or presentation, disclosures might be different, effective dates might be different, and transition methods might be different. So when we talk about our alternatives, we're really going through these 5 different items. Which one does it pertain to? Sometimes we might be just talking about a disclosure that's different for public and private. So far, we've been talking about real alternatives, different measurements. But we use this as a tool. Now for our last few meetings, I will tell you about the areas that we've identified, what we've been working on, and our progress to date. In the very beginning, our December 6th meeting, we decided on 4 items for pre-agenda research. Now you can imagine, all of us are new at the first meeting. We are raring to go. We have to slow down because you have to do the pre-agenda research before you do the actual analysis. We were ready to solve everything. We all thought we knew lots of problems that needed fixing. We were ready to go. And we have to, do this very thoughtfully and carefully. So we started with identifying 4 items for pre-agenda research, and those probably will not surprise you. Various intangible assets acquired in business combinations, variable and interest entities, plain vanilla interest rate swaps, and uncertain tax positions. And these were kind of the big 4 of where a lot of preparers, auditors, users were complaining about information not being relevant, standards being too complex and not giving enough benefit for the cost. So we identified these 4. Then in February, we discuss those and put on the formal agenda 3 items: VIEs, certain plain vanilla interest rate swaps, and intangible assets acquired in business combinations. Then there were a couple more that we identified that we wanted to start the pre-agenda research on: stock-based compensation and development stage enterprises. And I'll just talk a little bit about the plain vanilla and the intangible assets one. The plain vanilla was the result of the economic downturn, and no lender was giving fixed rate debt. So private companies were having to enter into a contract of variable rate debt, but then hedge it with something to make it look like fixed rate debt. It really was fixed rate debt. But because they didn't have everything aligned on day one, because of various ways that the standard was written, they couldn't use, they had to put the variations of the debt and the hedge valuation on their books. It created huge swings in their financial statements. So this was seen as being a real problem where the economic substance of a transaction really was not happening for these private companies. Then various intangible assets acquired in business combinations. A number of intangible assets, users said, had no value to them. Even though they were separately identified and tracked, the user said, you know, we take all those intangibles, we throw them out the door. We don't even look at it. We don't look at goodwill. We don't care about goodwill. It's not relevant to us. And so that was sort of the background of that particular project. VIE, and those two, you'll see, we talked about again in May. The VIE project, and I don't know what I was thinking, but I volunteered for the VIE project as well, will take longer. And I'm sure you can, anyone who has worked with Fin 46 can appreciate why, I think, because it's very complex. And to make alternatives to it will take a great deal of time, because you don't want unintended consequences of changing something and then having it affect more than what you started out wanting to affect. The item that we did not continue was the uncertain tax position. When we had our discussion about that, the consensus seemed to be that the implementation of uncertain tax positions was very difficult, that preparers had a hard time, auditors had a hard time, so the implementation was very, very difficult. But once that was finished, the ongoing work was not as significant. And so that one, we decided not to have immediate attention given to that one, but we'll continue to receive feedback and solicit feedback from stakeholders, users, practitioners. So that one is sort of, that one is sort of on the side. The ones that we're really focusing on are those other 3 and then a few additions. We also, in the February meeting, talked about the definition of a non-public entity. We talked about going concern, revenue recognition transaction, and EITF is looking at recognition of push-down accounting in certain circumstances, required push-down accounting in certain circumstances. We all got pretty excited about this one, some in a good way, some for, some against, but that's one that we're monitoring for the moment. Then we had a meeting in May. And you can see that we're meeting every other month. Every 2 months we meet, and before we meet, there is generally an education session before the meeting. So it might be on revenue recognition. We might have a complete revenue recognition education session by the staff at FASB for the entire council because not the auditors, I would say, would know a particular area, perhaps. The preparers might if it's in his or her industry specialization, and the users may or may not be aware of the background of certain pronouncements and what is changing. So May 7th meeting, we talked about accounting for identifiable intangibles, and we provided relief from recognizing certain intangible assets. So what we did was we took out of intangible assets certain items, things that are not contractual, are not legal, or as Billy would say, they don't have a piece of paper attached to them. They're like employee technology. So what the technology that employee might be carrying in his or her head. Certain things for private companies, this alternative, you would not have to account for those as separately identified intangibles. The reason it was seen as a good alternative is because it was costly to value what these intangibles were. And so, and then the users really didn't care about them anyway. So we have relief from separately identifying the intangibles, which means that goodwill gets bigger. So intangibles is going to get smaller, goodwill is going to get bigger. So the second part of this issue was, well, what do we do about goodwill? And we talked about various alternatives to that, and the exposure draft that will be going out momentarily, it has an amortization feature of goodwill, and a simplified impairment model. That is, an impairment analysis will be done if there is some triggering event. So that was the first big item, and the second one was, again, this receive variable, pay fixed interest rate swaps. And this does not apply to financial institutions, but it applies to other private companies who have these plain vanilla swaps, where it's a simpler approach to accounting for these types of investments. So that's what we did in May. And then we set for pre-agenda stock-based compensation and development stage enterprises. And I will tell you, the development stage enterprises has to do with the fact that when you have development stage financial statements, you have cumulative information. And many years ago, when the statement was written, when the standard was written, development stage entities were short. They were only in development stage for a short period of time. But now with pharmaceutical companies and other kinds of companies, they're lasting for years and years and years. So the question to the users and to all the angel investors and the VC people, do you really care about cumulative information for 10 years? Because it's costly, and maybe you don't care about it. Maybe you can have the last 3 years information, or maybe you put something in the footnotes instead of having people do this cumulative information. So it was not a huge hue and cry like VIEs were, but there were enough people that said, you know, I don't know that anyone is really using this kind of information. Maybe we should look at it again. Potential PCC topics. Here's a date that you can write down. On November the 4th at Ohio State University, we will be having our first roundtable. Our first roundtable and town hall. November 4th is a Monday. Then in our July meeting coming up, we will be deciding on 3 other town hall / roundtable locations in regions throughout the United States in 2014. So my guess would be there would be one in the Northeast, there would be one in the West, there one in the South, and we do have one November 4th already on the calendar at Ohio State. We will probably have these in, like Ohio State, we will have them on college campuses. where they have a large accounting department and a large facility where we could have a number of people. But certainly, outreach to all kinds of people is very, very important to what we do. And I would encourage all of you, if you see a pronouncement, when you see this one on plain vanilla swabs, if you see something on these simplified method for accounting for intangibles, if you have comments about it, send it in. All those comment letters are read. They're all posted on the website. You can read them all. And then they're summarized by the staff, but certainly you can go through and read all of them. Other topics for consideration, let me just go back to that. Other topics for consideration, other comprehensive income, disclosures of various type and their scope and extent for private companies, accounting policy disclosures, whether there should be differences for private companies and public companies, disclosures relating to defined pension benefit plans, level 3 fair value for non-financial assets, asset retirement obligations, leases, fair value disclosures in general, liability versus equity accounting, measurement or threshold issues of more likely than not versus probable, and possible additional revenue recognition considerations for private companies. So those are some of the potential issues that we could be looking at in 2014, but I think you can see that our agenda has been very full from December 6th through what's today, June 27th. It's not even 6 months, and we've got 3 issues out there we'll be out there for your review and comments, and we absolutely would love to hear them. But let me just summarize, and then I'll open for questions. I don't want to go into your break. Oh, I think I might have already gone into your break. But just to summarize, we're integrated with the FASB. We're identifying these significant issues. We're seeking input from all relevant stakeholders and having these town hall meetings. And with that, I want to thank you so much for your attention, and I welcome your questions. Thank you. Does that mean you all want a break? I'm available. If you have questions, I'm available. I'll stay up here. I'm also available during other times of the day, so I encourage you to ask me and give me any questions that you have. Thank you so much.